Hello, welcome to today's special live session on crypto-friendly nations. I am your host, Jazani Campos, and today we will be exploring the world of cryptocurrency regulations and investment migration. We have an A team with us. We are delighted to have two experts, Pedro Solimano. I'm sure you heard of him before. If you're interested in the world of crypto, he's a Chilean political scientist with over 5 years of experience covering the crypto space and founder of La Cadena. And I also have Laura Madrid, the research leader at Global Citizen Solutions Intelligence Unit. So, today we are celebrating the launch of the most comprehensive report on crypto-friendly nations developed by our own Global Citizen Solutions Intelligence Unit. This report assesses 75 countries across 13 key indicators, including regulatory environment, economic stability, tech and innovation ecosystems, and governance to highlight the most advantageous environments for crypto investors. I'd like to share with you some key takeaways from the report. But before I start, I just want to run some small housekeeping here. So I will ask some questions to our guests, and at the end, I will open the Q&A. So our guests are here on my side, Laura and Pedro. Don't open your mics yet because I'm not speaking to you right now. No, not yet, not just yet, in a bit, because right now, I'd like you, anyone who just arrived, we just started our live on the crypto-friendly reports, and I will throw you one of the main takeaways. So, in 76% of the 75 jurisdictions researched, crypto assets are legal to hold and transact, while 23%, and notably China, have imposed some form of cryptocurrency ban. Also, important to know, Europe dominates the top 10 crypto-friendly countries, particularly Switzerland and Liechtenstein, where private individuals are generally exempt from capital gains tax on crypto trading. There's a lot more, but I will leave the next takeaways with our research leader, Laura Madrid. Hi, Laura. Nice speaking to you.
Hello, good afternoon. Nice speaking to you. Thanks for the opportunity to talk about the report. I'm super excited to be here with you and Pedro. I think we are going to learn a lot from him, from his insights that are actually in the report as well. So to start speaking about the report, I'm going to address a little bit the methodology.
Sure.
Because we know that there are many reports and news on crypto-friendly jurisdictions. We focus our methodology on assessing regulatory framework, but we go beyond regulatory framework. So, as you said, Jizan, we researched across 75 jurisdictions, and we adopted this a multi-dimensional approach. We do research on regulatory framework. So we have countries where trading, mining, and all crypto activities are legal. We have some countries where the activities are not illegal, but they are some forms of difficulties for investors and for businesses to trade, mine, and establish any kind of crypto activities. Some of the difficulties are related to the financial markets, the lack of legislation or unclear legislation, and it makes more risky to invest in those assets. Then we also included, of course, tax optimization, and we analyzed tax regimes across the 75 jurisdictions. We have countries, for instance, that impose either no or zero taxes on capital income tax or capital gain tax, income tax. We also researched on the development of technology, especially related to blockchains, economics and stability as well. And at the end, we included a dimension of green transformation and governance, because we identified that the profile of investors that invest in crypto are young investors, especially millennials and Z generation. And there is a very recent report from Bank of America that says that these people are they have 5 times more crypto investments in their investment portfolio. And in the same report, they reveal that these kind of investors are also they also seek to invest in investments that have some kind of principled activities or principled investment. So they are focusing on investments that are compliant with SDGs and ESGs. And we know that crypto mining is an activity that is heavily reliant on energy. So the countries that are more developed in green transformation also scored higher in our report. It's not the most important element of the report. Of course, we focus on regulatory and tax optimization, but it is a dimension of the report.
Okay, it is certainly a very robust report and very comprehensive. We were talking to Pedro before we started live, and there was one of his comments, and I can definitely agree with him. But Laura, let me ask one thing. Can you explain why Europe, particularly countries like Switzerland and Liechtenstein, rank so highly in terms of crypto regulation and adoption?
Yes, it has everything to do with the indicators we use, because we think this is very important for people that want to invest in crypto. We know that this profile of investors are investors that seek some kind of risk in their investment, but of course, stability and security is also important. So when you talk about Europe, we say that this region is one of the regions that have the clearer regulatory framework. In 2023, Europe implemented their MyCar, markets in crypto assets regulations, and it encompasses a lot of regulations that aim to harmonize regulatory framework over activities of both issuers of and providers of crypto currency. They grant more transparency to the investors. They also implement legislation such as AML, anti-money laundering, and CTF, counterterrorism legislations, and know your customer regulations. This is related to Europe, but the country that ranked at the top in our index is Switzerland. Of course, Switzerland is not a member of the European Union, but their regulations is as or more robust as in the Europe itself. We have to remember that as early as 2014, Switzerland established their crypto valley in the city of Zug, and they are pioneers in integrating cryptocurrencies into their financial system. Everything is overseen by the Swiss Financial Market Supervisory Authority, and that's why you have this clarity regulatory framework in Europe. Also, those countries offer very beneficial tax regimes for crypto investments. We are going to talk later on specifically about some tax beneficial regimes. Um, they have a high exchange availability, so you have a lot of companies that will trade, sell, buy, and provide the environment you need for transacting with crypto. Of They have super developed blockchain technology. Um, And they are some of these countries that top the ranking are also very well developed in green transition. So that's why we have, I know that 8 out of 10 countries in the the 10 top positions are in Europe. But we are going to talk later on about the case of Singapore and the UAE, and there are also countries that scored very high in the index because they also develop clear regulatory framework, and more important, they have very, very beneficial tax regimes for crypto investors.
Okay, so Laura, I'm going to take a break. You will take a break now because I really like the way you covered the whole of most of the report. And I want to explore the tax element of it. And also, in order to make it a bit more dynamic, I will fly to Latin America, and I want to ask Pedro, because you've been covering the crypto space for quite a while, especially in Latin America, and they have high adoption rates of crypto there. So, what do you think makes Latin America a potential growth market for crypto investments despite the regulatory challenges?
Yeah, thanks for the invite, first of all. Yeah, exhaustive report, like you said, and really interesting results. I'm tuning in actually from Buenos Aires, and I actually think that Argentina is right now the biggest and most undercovered story that's happening in terms of potential growth for Latin America when it comes to crypto investments. I think the government of Milei, which I'm not going to give my political opinion on what I think of him, but I think that he's very pro-business, pro-innovation, pro-technology, and there's a huge grassroots movement that's really taken off in the past 3 to 6 months. That's really interesting and really exciting. So I just want to lay that as just like a broad framework for people to think about moving forward. I do think that Argentina is going to become a super hub in terms of crypto technology and things like that moving forward. Why is the continent a unique opportunity? There's a lot of things. I think first of all, we should step back and sort of understand what crypto is for and what it does. And for that, I'm going to step back a little bit further. And I think that we need to sort of bridge or divide a little bit, because I think Bitcoin is in a category of its own when it comes to cryptocurrency. And then you have the broader crypto space. So I'm not a big believer of using Bitcoin and crypto interchangeably. I do think that they're different. They have different technological, even if they share a little bit of their technological background and their underlying stack, I do think that they're very different at the end of the day, with both their goals, with the companies that are building on them, with their tokenomics, with countries that are implementing specific investment strategies and things like that. And so what is the need for something like Bitcoin in broad terms? It's the idea of dividing power groups, or the groups of power around money, whether that's central banks, whether that's government, that sort of separation of state and money. And so I think that Latin America presents a really unique opportunity, because governments here, there's a lot of political instability. There's a lot of power-hungry politicians and systems and infrastructure that sort of make for this continent to be easy to be co-opted by not the most democratic of countries. And so I think it presents a unique opportunity from people on the ground that are looking for a way to protect themselves against political instability, and political instability that might breed economic instability, that might breed social instability, and that sort of cascading effect. When it comes to specific examples, I think that obviously it comes as no surprise probably to the people listening, but I think inflation is a major issue in a lot of the countries here. Argentina, it's without a doubt. Venezuela, it's without a doubt. After the pandemic, we all saw a huge spike in countries, even historical countries. I'm Chilean, and countries that have historically had in recent years low levels of inflation. We saw huge spikes up to, I think, 10, 15%, which for Chile is, I mean, hyperinflation nearly, but obviously not. And I hope that my father, who's a PhD in economics, knows that's a joke. But yeah, I think that's one major component. I think the other thing is remittances. So Latin America relies really heavily on remittances, and cryptocurrencies, Bitcoin, stable coins like USDT and Tether, or USDT Tether, USDC, all that sort of stuff, provides a really easy and seamless and nearly instant and low cost transactions for anybody living anywhere. Bitcoin is a sort of banking of the unbanked. It's a cliche nowadays, especially because there's a lot of like push from traditional finance who has historically excluded a lot of poor and marginalized people around the world, that now they're sort of adopting the slogan of this is going to bring on financial inclusion and this is going to bank the unbanked and things like that. But cryptocurrencies, Bitcoin and others are providing that opportunity. And I think that that's something really interesting. And then something that Laura was referring to before, I think that young and like tech savvy population is also a huge push. Like the numbers that she said, I think make total sense. I have the majority of my friends who have some sort of exposure to cryptocurrencies. I think that traditional financial instruments don't make sense for my generation and the one after me. And I think as we go further down the line, people that are 15 and under, 10 and under, like the idea of going into a bank is going to seem like a remote and ridiculous idea, and everything is going to be digital, which comes with its own pitfalls. I'm not a techno utopian or anything like that, but I do think that that's just the reality of how the world is moving. And then I think the last one, so that I don't rant on eternally, is the demand for dollarization in a continent that doesn't have easy access, at least for the people on the ground, for dollars. So for those that are listening that don't know, there's these verticals in cryptocurrencies that are called stable coins, that are digital tokens that are tied one-to-one with a fiat currency or a government sanctioned currency, whether that's the dollar, the British pound, the Hong Kong dollar. And these provide access to something that will, preserve some sort of value against local depreciating currencies, which in Latin America, or I should say all fiat currencies, are depreciating and going, slowly inching towards zero. But the demand for dollarization in a country or in a continent that doesn't have that easy access, it also provides a really interesting sort of allure for investors looking for that sort of possibility or that sort of exposure that before wasn't easily accessible.
Pedro, thanks a lot for this overview. I was about to comment of Brazil is, I think, is the sixth for in crypto public adoption rates, and it's growing. And I want to address something with you because I was thinking about it. For me, nowadays, it seems that there is a paradox, like a crypto paradox, because of course, the whole idea of investing in crypto is based on sovereignty, and liberty, and but it seems that for maybe pressure of countries, financial institutions, and even some investors, more and more we see that this kind of investment is being integrated to the traditional financial market. Do you think it is a paradox? And do you think we are going to lose in sovereignty, and autonomy, and liberty, because more and more the system is trying to integrate these types of investment to their traditional system, and then you're going to have you're going to have more transparency, more compliance rules, and then you can lose this appealing of freedom and everything that this crypto world is based on.
Yeah, I think that's a really good question. And that's, as somebody who's ideologically pretty aligned with Bitcoin and the broader ethos of of what's being built now, I do think that that's a serious threat. And I think that that's something that's happening right now. I think that traditional finance is adopting cryptocurrency, not necessarily as a means for financial inclusion or anything like that, but I think it's just another way to get more exposure to assets that make them more money. I know it sounds very basic, maybe what I'm saying, but or reductionist. But I'm a bit skeptical of big banks that have had the option of offering financial inclusion and instruments and other ways for people to grow and empower themselves and things like that, to actually think about it now just because this new technology exists. I do think that there will always be a space for people that believe in the sort of cypherpunk ideals that gave birth to Bitcoin. Cypherpunk ideals are the idea of, the cypherpunks are a group of internet activists that realized that the internet was going to become what it is today and will continue to become. And they saw it as a key battleground, as a place for people to build tools that would provide places of protection, places of self-sovereignty, of transparency, of freedom of expression, free flow of information, all that sort of stuff. Those spaces will continue to exist, but they're going to continue to get smaller and smaller and perhaps more niche. I also think that, and again, I don't want to beat this too much, but I think that there is a divide between Bitcoin and the broader crypto space. And I do see more push for something along the lines of that ethos in the Bitcoin space than in the broader crypto space, because the broader crypto space comes with a clear financial incentive to grow at all costs, by either creating protocols with their own tokens, and so they have to pump those tokens or they come very VC funded, and VC fund firms have a sort of, they have an incentives to sort of push for really fast growth at all costs. And that means fundamentally integrating with where a lot of the money is, which is the traditional financial system. But once again, I do think that there's going to be pockets where self-sovereignty, freedom, privacy continue to get pushed forward and continue to exist, but they're going to get few and far between. I do think that there is a key role that the media is playing in portraying certain elements of cryptocurrencies as something bad, and that's swaying public opinion so that they look for ways to grab exposure in ways that are a little bit more sterile. So instead of going and using a non-custodial wallet or using some sort of encrypted services or peer-to-peer or anything like that, the media is creating this sort of idea that cryptocurrencies are a safe haven for criminals and we need KYC and anti-money laundering and all this sort of stuff. And so they're looking for ways where they feel more comfortable, they feel more accustomed, and they have to give up a little bit of also the responsibility to be able to get that comfort. There's cryptocurrency comes with a lot of freedom, but it also comes with a lot of responsibility to properly exercise that freedom. And there's a lot of people in this world that don't want to do it, both out of they don't want to do it, but there's technical challenges to it that are undeniable. The idea of private keys and seed phrases and all that sort of stuff. And then I think another important issue is something that you touched upon in the beginning, is this idea that mining is something that's moving towards green energy or ESG specific or ESG friendly. And I think that's also something that the media has played a role in. And so now you're also seeing people that are approaching traditional investments or traditional companies that say they're ESG friendly. This is in the crypto space. There's a huge, and we can touch on this later, it doesn't necessarily have to go down this rabbit hole, but there's a big misinformation in how Bitcoin mining operates and how proof of work uses energy. And so there's going to be also investors that are looking for protocols that say that they're ESG friendly and that traditional finance says that they're ESG friendly or using green energy or anything like that, which if you ask me is anything from the truth, but that's at least the narrative that they're spinning. So yeah, I think that's, I hope I answered your question, but yeah,
Yes.
that's how I sort of view the broader space and why there's this sort of fusion or like broadening of control of traditional finance into the crypto space.
Yes, totally. I was just wondering if, from the perspective of the investors, they are the ones that, for crypto, become not a more mainstream, but a bigger or larger market. Investors would seek for more safety in their investments. Or if those kind of investors, they're more like a risk. They don't mind the risk of investing in crypto assets. So I was thinking, if the demand is not only from countries and from regulatory bodies and even banks, but from the perspective of the investor.
Well, I think that the investor that looks for exposure in cryptocurrency is one that has to be, by definition, a little bit more risk tolerant than what the majority of investors in traditional finance are looking for, because cryptocurrency is a highly volatile asset class. That's undeniable. But with the same sort of volatility comes the same sort of upside or potential upside. So traditional, like, investors that are looking for exposure to crypto through traditional asset managers are just looking for the semblance of more stability and more comfort of having some sort of institution in the background or even on the front end. But they also want to sort of get some sort of access to that potential upside and those, percentage gains that we see across crypto. I do also think that there's an important problem in the crypto space that investors are also having to deal with, which is a UX and UI experience. Like, cryptocurrency is still very early. And so having to deal with specific things like public addresses and blockchains and all this sort of stuff, it isn't quite there for people that aren't entirely technologically savvy. And so they feel more comfortable going through their mobile banking app or something that they know, or having somebody to speak to, all that sort of stuff. So I think it's a mixture of trying to get some degree of comfort or some degree of something that's known by them, while also having the potential access for, or the potential exposure for the financial upside that comes with cryptocurrency.
Yeah, it's the problem of the accessibility. It's not the first time I hear that US and UI is a challenge in the crypto world. But I'm going to bring you back here to the reports, because we don't have much time and I want to take this opportunity to share as much information as possible. And by the way, brilliant question, Laura, and I love the concept of the crypto paradox. And thanks, Pedro, for such a thorough response reply. I want to touch upon the one finding of the report, which highlights, I think, that 15% of high net worth individuals reside on countries with crypto bans. Laura, feel free to correct me if I'm wrong. And I wanted to delve into how is this influencing wealth migration patterns, and also jump into the tax treatment when it comes to crypto investment, which I also think is relevant in this matter here. But let's talk about the finding of 15% of high net worth individuals in residing countries with crypto ban. Pedro, Laura, do you want to talk about it? Do you have something to say?
First of all, what we did when we reached this conclusion was we took the top 20 countries in the report, of course, that has the highest populations of high net worth individuals, and we realized that 15% of their population is living in countries where there is some kind of ban or difficulty to invest in crypto assets. Of course, you can always use international platforms to invest in crypto assets, but there are countries like China where even this kind of operations would be illegal. So I'm not in the. We are not in the report defending the idea that this is an essential element when people decide to relocate. But it's true that there is already this expression of crypto refugee was coined, and there are people that do have to leave their country of residence to be able to invest safely in this kind of assets. So that's how we reached this conclusion, and as we will discuss later on, it might not be the main or the most important element when a person is thinking about relocation, but it can play a role when people are deciding in which country they want to establish, especially nationals or fiscal residents from countries that implement total ban for crypto investment. I don't know if Pedro has something to say about this expression, crypto refugees. I don't know if you heard about it in the media, and if you want to comment on that.
I've run across it. Yeah, I think it's an interesting concept. I find it interesting that the idea of a refugee would get tied in with a high net worth individual. I don't know if that was the specific link, but I did find that amusing. I do think that high net worth individuals are always going to find ways to preserve their wealth, and crypto bans, even if they do exist in their specific countries, I don't think it this is an opinion. This is how I view it. I don't exactly know how it would operate, but high net worth individuals have a pretty good way of avoiding bans of all kinds, avoiding tax implications of all kinds. There's reasons why tax havens exist around the world, and I think that having bans from countries, whether that's any sort of ban, whether that's on mining or holding or accessing in any way, I think at the end of the day, high net worth individuals have a pretty good way of skirting those and like moving around them. That said, I do think that high net worth individuals will still continue to look for places that have regulatory certainty, not necessarily as individuals, but through the institutions or the entities that they manage. So, for example, large hedge funds, large asset managers, family offices, ones that might be a little bit more behest to regulation and tax certainty and things like that. I think those groups will start to look and focus on tax-friendly jurisdictions. So whether that's Switzerland, whether that's Portugal, whether that's Singapore, Dubai, El Salvador, countries like that, they're going to start to see a bigger presence of these entities. When it comes to high net worth individuals themselves, then I think the landscapes changes a little bit. I'm not entirely sure how, but I do think that they have a different way of maneuvering all these bans. And then something that I think is an interesting opportunity that I don't know if opportunity is the right word, but I have been seeing, and there are companies that offer second and third citizenship according to like crypto specific investments. So whether that's El Salvador, Turkey is another one. where if you invest a certain amount in cryptocurrency, it also gives you some sort of residency, and that creates this sort of quote unquote maybe crypto refugee or some way of helping people move from one jurisdiction that's not friendly to crypto to another one. So yeah, I think it's interesting, and I think that there is a game theoretical side of things, and I do think that countries that are accepting crypto are becoming a lot more attractive to high net worth individuals and to family offices and these hedge funds, as are for investors of all sizes. And so I think that countries that have bans on them now will start to see a drain of capital from their internal economies into places that are a little bit more friendly, especially because cryptocurrency and money in general is becoming much more mobile and international. And so it's becoming a lot easier to sort of send money across the world. And so I think that that's also going to become a major pattern that we're going to start seeing in all sorts of capital markets and economies around the world, that sort of shift for places that are a little bit more allowing of these new technologies and investments and asset class moving forward.
Laura, were you going to say something?
No, because Pedro just said that capital is more and more mobile, and I think also people are more mobile. So one of the strategies people use, well, some people at least. So one of the strategies people use to avoid this kind of bans and even higher taxation is, as you said, acquiring a second citizenship and relocating their fiscal residence to countries that are more friendly to any kind of investment they might have. Of course, as we said in the beginning, newer generations are more likely to invest in crypto assets. So this will be a trend for countries when they want to attract wealth. But any kind of investment, the countries that have friendly environments for any kind of investment will attract wealth. And as Gizan was mentioning, tax is a critical factor for any kind of investor and crypto investors as well.
Okay.
So I don't know
sorry.
if you... Sorry.
Yeah, no, I agree. And I think that tax is one of the main things that people are going to start considering. And I think that that's why there's being a broader expansion. I think countries are starting to realize what role crypto is playing, how crypto might serve for tax implications, especially in the high net worth space. I do think that when it comes to high net worth individuals, crypto continues to be a very small portion of their interest, both actual interest or just technological interest or anything like that. I have had the opportunity of speaking with people who do manage billion-dollar hedge funds, and crypto continues to be just like a toy and something that they're not entirely interested in yet. I do think that responds a little bit towards that sort of uncertain tax situation. And the countries that are implementing those like crypto favorable tax structures are definitely going to have a first mover's advantage, going to create that network effect, and going to attract a lot more capital at the end of the day than the countries that are either not only banning it, but I think that there are countries that ignore it. And I think that countries that ignore it are also going to be living through that sort of uncertain scenario of where does this entirely lie? And then what do individuals and investors and hedge funds do in those countries that don't have a specific stance on it and haven't entirely defined what the playground or what the playbook is for companies in the space, for new startups, for projects, for open source projects, and for the type of technological or tech stack that is allowed. So I think that's something interesting that, we should have an eye on moving forward.
Absolutely. And I do, I just want to clarify here, that this live is about the launch of the Crypto Friendly Nations report from Global Citizen Solutions. So you won't find any tip on crypto investment, where you should invest, just because of some comments here. So it's always
None of this is financial advice.
no.
Disclaimer.
And so basically, what we're talking about here is what investors should be aware of when considering relocating to crypto-friendly nations. And we are talking about the attractiveness of these countries as well as the regulatory framework. We had really good expert insights, but right now we've got some questions here and I really would love them to be answered. So I'll start with the first one. I think this one's for Pedro. Let me know. Amal asks, country allows selling of crypto US dollars, I believe, no, USDT, and transfer to bank account without any tax, or which countries impose minimum taxes?
Good question. The selling of cryptocurrency is a bit of a strange one because it triggers capital gains tax depending on which jurisdiction you're in. There are countries like Portugal, Dubai, or even El Salvador that are establishing 0% tax on capital gains. Or I think Portugal is right now in the middle of shifting that and creating some sort of minimum of it. Whether that's transferring to a bank account without any tax, it ultimately depends, or it's very jurisdiction specific. I don't know if you're looking for this for personal advice or anything like that, but any country that has a sort of quote unquote favorable tax incentive will be looking for, or will be offering, tax benefits for people that are doing crypto trading, that are companies in this, or that are investors in the space. So whether that's Switzerland, whether that's Portugal, whether that's Liechtenstein, whether that's Dubai, Salvador, Hong Kong, Singapore, those are countries that it might not have zero tax, but they will have less tax, and they will have things or structures in place for people that are looking to trade or looking to invest, that will have friendlier benefits. Then you have countries that are outright making pretty crazy ideas, or like the US that has that's talking about capital gains tax for any transaction over $600, or that they have to sort of declare any sort of transaction over $600. I think that's a pretty ridiculous stance, and I don't know how long that's going to last or anything like that. But it's any country, sort of looping back in, any country that is crypto friendly in tax, when it comes to tax, or when it comes to any sort of legal framework, is always going to offer some sort of tax benefit for investors. I think that's an important thing, rather than going into the specifics countries. That's something to keep in mind. Tax is always, and tax benefits is always going to be a key component of attracting investors that are selling or sending or receiving or holding cryptocurrencies in their investment portfolios.
Yeah, that's a very good and succinct way to put it. Thank you. Now, next one, I'm really sorry if I'm rushing here. It's just because our time is, we're reaching the end. Next question. What challenges could other countries face if they want to follow China's lead in regulating crypto mining for environmental reasons? Do you think other countries will follow China's lead?
This is a controversial one. And I'm going to say something controversial as well. And again, I spoke about this before. There has to be a distinction between Bitcoin mining and crypto mining. A lot of crypto mining now uses something that's called proof of stake, where companies or projects or teams deposit a certain amount of cryptocurrencies in a smart contract, and they get the possibility of participating in the mining process. I might have to take a step back even further, which is mining is the process. A miner, what they do ultimately is secure the network and receive rewards for securing the network. So a miner is a specialized computer that has two jobs. They collect all the transactions that are having, and then they're trying to find a specific number. This is in the case of Bitcoin and proof of work, and they try and find a number. So what they do is that they use energy from the real world and apply it to computation. And then every 10 minutes on average, that number gets found by a specific miner, and it gets rewarded in the form of cryptocurrency, in this case, Bitcoin, 3.25 Bitcoin, every 10 minutes for expending the energy to secure the network. Why? Satoshi Nakamoto, who's the creator of Bitcoin, realized that the only way to create a fair way of money is creating some sort of competition to be able to, everybody gets an quote unquote equal opportunity in creating money and securing the network. Right now, money creation comes specifically either from private banks or the government. And yeah, that comes with a whole host of problems. Now, going specifically to the question, Bitcoin mining, why is it so controversial? Because it uses energy to expend or to secure the network. There's people that are going to push back against the idea that that should exist and that they should be able to use energy. I personally think that Bitcoin needs to use more energy. I'm a big fan of Bitcoin mining. I think that, it serves a critical role in the energy crisis that we're living around the world. And why? That's because Bitcoin, to be able to mine Bitcoin, all you need is a connection to computer or a connection to the internet and a source of some sort of energy. What's a reliable sense? What's a source of energy and energy centers or the grid usually has to locate near big urban populations. But renewable energies, especially, they are in quite remote areas. They're like hydro, solar, wind. Those don't exist very much close to large population centers for obvious reasons. Now, what does Bitcoin mining do? You can set up a Bitcoin miner somewhere near a solar plant or a hydro plant, and you just plug it into the excess energy, because since it's not easy to transport that energy across the grid because they're in much more remote places, Bitcoin mining can serve a really interesting way of making use of a lot of stranded energy that's happening around the world. And that's something that we're seeing. We're seeing Bitcoin miners set up in places that are quite remote, in Paraguay, in places like Africa, in places in Asia. So I think that's a really interesting use case, and it's going to be something that needs to happen in a much more broader way. I think there is a massive pushback against that, both because of the media misinformation and because of this idea that countries need to be ESG friendly. I personally think, and here might be a controversial take number two, I think ESG is a bit of a fraud, because the countries that are pushing it, they don't actually, or the people in the countries that are pushing it don't actually believe in it or don't actually practice it in real life. You see it at the World Economic Forum. People or the countries and like presidents and prime ministers and state leaders, they arrive private jets with hundreds or dozens of private cars, using all sorts of ways that are burning energy and all sorts of things that are not conducive to what they then get on stage and actually proclaim. So with that in mind, and looping back into your question, do I think other countries will follow China's lead in banning Bitcoin mining? Yes, for sure. Will there be a pushback from the general population? Yes, for sure. Is it driven by misinformation and how Bitcoin mining works? Yes, for sure. Should we be trying to get more information on how this actually works out into the world? Yes, for sure. But I think that once again, and this might be looping into something that we didn't speak about before, cryptocurrencies, Bitcoin, and the other ones that exist like it, they're a great litmus test for how much the government believes in democracy, transparency, freedom, things like that. So the challenges that countries might feel or might get are from citizens that finally start and investors that finally start understanding how this technology works, what purpose it plays. And banning it will mean that you will see, whether that's high net worth individuals or smaller investors, they're going to start to take their capital elsewhere. Crypto is very mobile. It's instantly transferred across the world. It can happen in a peer-to-peer way that eludes all sorts of control that the government wants to place. And so countries that are going to start implementing these large bans are also going to see probably some sort of backlash from their citizens and how it works and where they're placing their money. And to go to a specific case in point that's been surprisingly but unsurprisingly not talked about today is the case of the US. We're seeing now the US, crypto has become a main part of the conversation and the political discourse happening there. Congress has been having multiple committees, hearings, inviting all sorts of actors from the crypto space. Whether that's going to move towards crypto-friendly legislation is a completely different topic, but we're starting to see Donald Trump is making it a specific part of his focus and his campaign trail. Kamala Harris is making it. There's a pro-crypto caucus in Congress. And that's also because of the backlash that the Joe Biden administration has been pushing to ban mining, but also to take this very specific, very aggressive, very regulation by enforcement attitude towards the crypto space. And so we're seeing a massive drain of not only investors, but a massive drain of companies and businesses and startups that are having to look to other places that are specific to where they want to set up shop. Laura mentioned it earlier. Europe's passed their landmark regulation, which is MiCA, and they've been absorbing a lot of the talent, a lot of the technology, and a lot of the money that's flowing into crypto. And countries that continue to take this aggressive stance to it, whether that's miners, whether that's specific banking services, whether that's investors that simply want to buy, hold, and trade cryptocurrency, they're going to start seeing that. And so the challenges at the end of the day for governments is, number one, get with the program quick. And then number two is create the specific set of regulation, whether that's tax, whether that's allowing companies to flourish and what that specifically needs. And then to also take a very sort of look at how the country operates on the inside, and from the inside start building out, instead of just looking at what's happening across the pond and then say, that's working there, we need to adopt it here. No, Dubai has a completely different cultural background, economic background than Argentina, than Mexico, than El Salvador, than the US. And that also needs to be placed into the picture. So yeah, I hope that answered the question.
It did. It covered a lot, and you also shared with us your insights on the mining ban. So I think it's important. I think it brought a lot of different perspectives into this discussion. And so just to answer some of the questions here, yes, this recording will be made available basically when we finish, when we hit the stop button. Just allow it a couple of hours and it will be on our channel. You'll be able to review any point if you want to. Unfortunately, we're reaching the end. So I'd like to thank Pedro and Laura for joining us today. Thanks for sharing your expert insights into the world of crypto-friendly nations. I think it was very clear that crypto regulations, tax policies, infrastructure, they all play a pivotal role in shaping the future of crypto investments. And obviously, countries with forward-thinking policies are becoming prime destinations for investors. So yes, thank you to you all, our audience, for tuning in. And be sure to go online and check our latest report from Global Citizen Solutions for more detailed insights into the crypto-friendly nations. And until next time.
Thank you. Have a good one.
Thanks.
Thanks.